Donald Trump's latest tariff policies are shaking up global trade, and India is in the spotlight. With reciprocal duties aimed at balancing the US trade deficit, India's key sectors like software services industry and gems are facing challenges. But amidst the negatives, there are silver linings for long-term investors and opportunities for India to strengthen its domestic fundamentals. Let's break down the positive, negative, and promising aspects of Trump's tariffs on India. Donald Trump's administration has reignited trade tensions with tariff policies targeting major economies, including India. These reciprocal tariffs aim to address the US trade deficit, which has expanded from $466 billion to $1,202 billion. While India's surplus with the US stands at $36.7 billion, the new tariffs are set to impact key export sectors. India's exports to the US, valued at $80.8 billion annually, include electrical machinery 15.6% and gems and jewelry 11.5%. These sectors face increased costs due to steep tariffs, reducing their competitiveness in the US market. Gems and jewelry exports, previously taxed at just 2%, now contend with much higher rates, likely leading to job losses and revenue cuts. The IT sector is also vulnerable, with indirect effects such as reduced outsourcing budgets as US firms prioritize domestic hiring. Auto parts manufacturers face a 25% import duty on components like engines and transmissions, further straining revenues. Global trade slowdown may add pressure on industrial goods and raw material exports from India, slightly dragging GDP growth. Additionally, nations like China and Vietnam may redirect excess manufacturing to India, flooding markets with cheap imports and pressuring local industries. India has several advantages that mitigate long-term damage. Its domestic consumption-led economy is less dependent on exports compared to peers like China or Vietnam. The China Plus One strategy, a business diversification approach where companies move manufacturing and sourcing operations outside of China to reduce dependency and mitigate risks, adopted by global firms, positions India as a preferred destination for investment. India's relatively lower comparative tariffs make it attractive for electronics manufacturing hubs looking to sidestep Trump's measures. This could boost local production and create jobs in high-growth sectors. For investors, opportunities lie in Indian equities and gold as safe haven assets during market turbulence. Experts recommend deploying capital into large-cap funds through staggered investments over 3 months while maintaining exposure to fixed-income strategies like well-researched bonds offering attractive yields. As India enters an easing rate cycle and benefits from softer commodity prices globally, consumer spending is expected to rise, providing macroeconomic tailwinds for growth. While Trump's tariffs present immediate challenges for India's trade-dependent sectors, resilient domestic fundamentals and strategic positioning in global supply chains offer a promising outlook for long-term investors.